Ladies and gentlemen, welcome back to the channel. Today we're going to be doing a data deep dive into my liquidity run one candle setup on gold. As you guys can see on screen now, I have my Notion sheet up with about 600 trades collected, which is about 5 years of data for the system. And right off the bat at 2.5 RR management, we have about a 41.5% win rate. And at 1R, there's about a 68% win rate. Now, before we dive a little bit deeper into the data, I do want to show you guys my last month of December. You guys can see I had a profit of about 10K with about a 44% win rate, slightly above the true win rate of the system. But as you can see, we started the month off with 2 losses, a win followed by 3 losses, another win, loss, loss, win. As you guys can see, a streak of winners here, so on and so forth. And within the month, we only had a max drawdown of 3 losing trades, which were all consecutive here. And this is with 2.5R management. And in the past, I was actually managing this system at 1R, but I decided to make the switch to 2.5R just so slippage doesn't eat at this system over time. And I found this to work better. Of course, I'm taking more losers, which isn't always best for compounding, but the fact that this is 2.5R and it has about a 42% win rate, it is still shown to perform at quite a good standard. And as you guys can see, the first trade of the month was on the 1st and the last trade on the 31st. And the data set starts off at this candle all the way to this set of data here. So essentially all the trades are in this sample size of data here. After the end of this video, definitely feel free to backtest this session for yourself. The rules are completely mechanical, so you guys will see all the numbers add up. These were real live trades. And of course, you guys can confirm that on your own end after the video. And if you already don't understand how this strategy actually works, I'll give you guys a quick rundown. For the case of buys, we just need to let the daily candle close, measure the fib with these levels here, and we're going to be placing orders on both sides given the buy and the sell right as the daily candle closes. So you place your orders on both sides and you are done for the day. And we're simply letting price finish out the range. And if by the next day's candle open, there's no trade, we are simply canceling both positions. And of course, we also want to avoid these hours here. That's what the data was tested with. But if we come back to the data here, again, at 2.5R, we have a 41.5% win rate, which is quite excellent, which equates to 0.45 RR per trade, followed by the previous 1R model I was using had a 0.3 RR per trade with a 68% win rate. And for some of you guys, it might be a no-brainer to go with the higher RR per trade system versus the 1R with 0.38 RR per trade. But what's important to understand is that the higher win rate we have, the less losers we are taking, which allows the account to compound faster. So there's kind of a misconception in the trading world about high RR systems. Yes, they can work, but you are going to have bigger losers. You're going to have bigger streaks of losers, which means you have to risk less, so your drawdown periods aren't as intense. And that is why high win rate systems still have a place in my trading plan. For other systems I'm currently testing, but I found with the gold system, this 2.5R management is the winner as far as slippage, as far as RR per trade. And of course, as you guys can see, December was a great month with this system. But let's go ahead and play with the Monte Carlo simulator just so you guys can see how the expectancy of this system actually plays out and how you can apply this to your trading to give you an idea of what kind of results you can expect. So let's just go with the standard 100K account. And this system can definitely work with prop firms. I personally do not trade prop firms. I'm not a big fan. Of course, you can definitely pass the evaluation with this system and then go on to trade the live account. You just have to understand drawdown and manage your risk accordingly. So let's go ahead and start with the 100K account, 1% a trade, which is perfect for this system. We're going to have a 41.5% win rate with the 2.5R. There's no break-even rule as of right now, and it's about 18 trades a month. And let's just run the simulation for 1 year, 2.5R. I'll go ahead and run a simulation. I don't know why it's doing that there. All right, perfect. So as you guys can see, in this simulation that this Monte Carlo software ran, in the best case scenario, it had about a 3.8x return with only risking 1%, which is absolutely insane. And in the most possible case scenario, which is this like blue line here, it did about a 2.2x on the accounts. And in the worst case scenario, it did about 17% on the account, which is still excellent. You are literally beating the stock market's returns. And in the most possible case, we had about a 9% drawdown, which is very, very manageable. If you're on prop firms, this is a little tight. To be honest, this is a little tight. So you might want to risk less per trade, let's say 0.5%, 0.75%. Start to create that wiggle room in the account, and then you can increase your risk to 1%. But you also have to understand worst case drawdowns. This can definitely happen, and this is why you have to manage your risk accordingly. And for reference standard, whenever I run a simulation, for the worst case, I want to see a 20% max to dictate my risk. So as you can see, risking 1%, 20%. So 1% is the max risk I would run on this given system. And of course, in the best case, we had only a 5% drawdown, which is excellent with about a 48% win rate. So it's performing above the true win rate. And that's what you're going to see when you're running these simulations in the best case scenarios. It's going to be performing above the true win rate. But of course, for the most realistic outcome, hence the label most possible scenario, you can see it's performing at a 39.4% win rate, which is below the true win rate. So a general rule of thumb is to always use your most possible case win rate to get a realistic expectancy of how your system is going to actually perform. And of course, when you're trading a purely mechanical system, you also want to account for worst case scenarios, because all we're doing is playing the probability game. And in the game of probability, you have to understand variance and how the probability distribution is going to occur over the long haul, right? We don't just want to trade a system for a year and then be done with trading and retire. We want a system we can constantly exercise so we can be consistently extracting capital in the long haul, not just for 1 year, not even just for 5 years, but for the entirety of your lifeline. We're just constantly compounding and growing our accounts. We can eventually use this account to live off of, keep reinvesting, or do both, which is the best of both worlds. But just for reference, right? Let's go ahead and run the simulation with the 1 hour management just to see how the results may vary. So we'll keep the 1% and we'll adjust this to 1 hour. We'll run a simulation here. So this is actually quite interesting to see. So you're not going to have as explosive upside in your best case scenario, but you still have that steady equity curve, which is more common in the higher win rate systems, which helps ease the psychology. It helps remove those intense drawdown periods. And overall, there's just more peace of mind when you're trading a higher win rate system. That's generally how it is, but your upside is going to be capped. It's more of like a steady equity curve, like I said earlier. And as you guys can see in the best case scenario, about a 2.3x most possible case, 1.8x give or take, and 30% in the worst case, which is still insane. But the difference here is that in the worst case, there's only 5% drawdown, which is actually really nice to see. And I'm going to show you guys something in a second after we go through the rest here. And 7% on most possible and 4% on the best case. So the drawdowns are much more contained. They're much healthier. And that is the upside of having a high win rate system with maybe a lower RR per trade. So in the end, it really just depends on your psychology. How do you want to see your account grow? How aggressive are you willing to compound your accounts? But the caveat is if our drawdown periods are going to be less intense, we can risk more per trade, right? And my general rule of thumb is 20% in the worst case scenario. So that means I can increase my risk up to 4 times, risk 4% per trade. And that sounds crazy, but it's definitely possible. But for the sake of this video, let's just go ahead and do 2% per trade, which is still a reasonable and responsible amount to risk on a regular basis. And we'll simulate the returns here. And as you guys can see, in the best case scenario, it had about a 6x on the account. In the most possible case scenario, a 3.5x. And in the worst case scenario, the account still doubled, which is absolutely insane. And in the worst case, we're still checking the box on under 20% drawdown. Most possible 8%, in the best case 6%. So as you guys can see, the high win rate, low RR per trade systems can actually be very powerful if you're willing to risk more per trade. Now, again, I'm currently not managing at 1-to-1 on this system anymore. I noticed at gold, depending on the time of entry, the slippage can definitely play into effect. I wasn't really comfortable in the long haul at 1-to-1 per trade. So of course I want to increase my profit factor at 2.5R just so slippage doesn't have as much of an effect. But what you guys should be taking from this video is that all you need to do is form a set of rules, keep the system stupid simple, keep the rules 100% mechanical, backtest it to absolute oblivion, and for me, that's about 500 to 1,000 trades. And I would generally go for the 1,000 trade mark, but this system was showing quite a strong edge, so I decided to cap my testing at about 600 trades and start trading this live. All you guys need to do is get the data for a simple system you can apply every day. And once you have the data, that is when you want to form an expectancy. What can I actually expect from trading this system, right? We're not just going in blind, trading off intuition or some make-believe concepts that doesn't really have data-backed proof. We want to create the proof of concept for ourselves and then apply it to the live markets, so we can consistently be growing our account and extracting capital. And then after you do that, either on ChatGPT or this Monte Carlo tool I'll link in the description, go ahead and plug in your numbers, whatever your account size is, whether you're starting fresh on your own account with $1,000, $10,000, or whether you're going for the funded account route. Go ahead and plug in your numbers, your risk per trade, your win percentage, and of course the rest of these stats here. So this way you can form an expectancy for your system so there's no surprises. All you have to do is execute the damn strategy and rinse and repeat every day. Heck, you can even form an EA for yourself that trades for you in your sleep. And that is in fact what I'm working on for this system. Now I've gotten the live proof of concept to the point where I now want to form an EA so this thing can trade for me. And if this EA is something you guys want access to in the future, let me know down in the comments. But of course, if you guys already haven't, I have a free one candle playbook down in the description. You guys can backtest those systems and maybe even refine some of those systems to your own liking. And then that way you can collect your own data with maybe some extra rules you made or some extra refinements and apply this method here. Get the data and then understand your expectancy. And then of course it's time for the live markets. And with time, you will have results like this on a month-to-month basis. But again, we want to be understanding our account growth on a year-to-year basis. And that is where the Monte Carlo tool here will give you that perspective. And honestly, this gold one candle system is probably the favorite out of all my systems. This is why I've been primarily trading this one live in the past few months. It's been showing quite strong results, so I'm happy to share this with you guys. Of course, before you trade this live, do some of your own back testing. Again, you might even find some of your own refinements that work better, right? And the goal of these one candle systems is not just to give you the system, but give you the framework so you can form your own stupid, simple systems and then apply them to the markets. You might not like these one candle or Fibonacci strategies. That's totally fine. I wouldn't expect you to resonate every system I create, but all of my systems have one thing in common, and that is showing up at the chart for the same time every day with minimal chart time, minimal screen time, and just making decisions based on data, not intuition or any of that bullshit. I used to be a big smart money concept guy, which I still love to look at the market in a smart money lens, but I found that more useful for investing decisions and long-term plays, but not necessarily for my day-to-day trading. I let the data do the talking. That is the best way to do it. And trade psychology becomes quite effortless because all you're doing is following rules. I mean, it's not that difficult, right? But when you're trading off intuition, that is when there's all these different emotions and thoughts running through your brain. You're forced to be right, you're forced to predict, but with this way of trading, all of those factors are eliminated. But anyway, I hope you guys enjoyed this data breakdown. If you have any questions, leave them down in the comments below. If you guys want access to this EA that me and my team are developing, sign up for the mentorship waitlist down below. Just fill out the form, answer the questions, and then once my mentorship is live, someone from my team will reach out. But anyway, I hope you guys enjoyed the video. I will see you guys in the next one.